Is the mood a little damp this time, Nirav?
Well, if you look at the earnings, there have been some pullback in earnings and all. After almost, 25% returns on the Nifty, 35% returns on the mid-cap, small-cap index, and stocks are up 100%. If they pull back 15-20%, I'm not too worried. So, we had a great post-pandemic, recovery in the economy, recovery in the markets, recovery in the profits, and capital productivity. The part of the game, but if you look at the next 3, 4, 5 years, I can't be more bullish.
Can't be more bullish. That's an interesting comment. You echo that view, Manish?
So, Nirav,
and sorry, the part 2 of the question is, Nirav is saying I'm okay with 15-20% correction. 5% may people are really feeling scared. 15-20 is a slightly difficult one to digest.
And 5 years आप बोल रहे हो, उतनी patience कहाँ है लोगों को?
But I'm saying if you don't have a mental construct to be in the markets for next 3 or 5 years, if you can't see a 20-30% drawdown, I don't know how else to make money in the market, no? So
there's no free lunch. You can't have high returns and low risk, right?
It's not possible.
Okay, but Manish, yeah.
So, Nirav, just looking at this quarter's earnings, you do some loud thinking as to what is happening, because this quarter consumption is really weak. You have the finance minister also alluding to the fact that the purchasing power of the consumer is weak. Now, go back to 2020. Okay, between 2020 and 2024, what exactly happened? Government gave out stimulus. You had a whole lot of fiscal deficit that was rolled into. What did that do? And actually, this fiscal deficit, propelled the capital markets, the real estate market. You had leveraged households piling on to consumption, discretionary, your autos, etc. That went up. You had government, spent a lot of infrastructure. Government companies did very well, so on and so forth. This is what happened between 2020 and 2024. What is happening now? The current budget says that FRBM will be followed, which means that the budget deficit or the fiscal deficit needs to come down. I think that is the pain that is getting felt. That the household leverage, which was playing out between 2020 and 2024, the household leverage is no longer available. And the government is in no mood to give largesse, like the Manregas of the world, or fertilizer subsidy, or food subsidy. They are doing what they can, but you'll also have to stick to the FRB. That is the pain what we are seeing today. That corporates, they have got corporate tax cut. Their profits swelled. They were supposed to do capex. That has not happened. The government has done the heavy lifting. Private capex was supposed to happen because they were making huge amounts of profits. That didn't come through. Now, you again don't expect the corporates to do, because if all this while they have not done capex, is basically again the heavy lifting has to be done by the government only. And households, you saw urban consumption not doing well. Rural was some hope. That has also was struggling over the last few years. And if you have tier 2 banks, BFSI names come out as a surprise, saying that these are the provisions that need to be made in the current quarter numbers. I don't think this lasts for only one quarter. It lasts for a few quarters, right? And from that point of view, the pain in the household is clearly getting felt. So we got some fabulous returns in the last 1 year. Maybe it's the time to consolidate. It's the time to protect your gains rather than aim for the next 50%. If it comes through, it's a bonus. But these are the things which needs to come through, because the earnings growth is anemic.
How will you protect your gains?
Sector rotation. It is sector rotation. India has a whole lot of sectors today, 57 sectors. I have alluded to this before. The high beta, right? The capital goods, the railways, the defense, even some aspects of EMS, power, they will be vulnerable. Where do you hide? And I'm telling you, these are not selections, these are allocations. BFSI, very cheap. Pharma, defensive, Biosecure Act coming through. Technology, coming out of a low cycle into an up cycle because of rate cuts and so on. And these are index heavyweights. BFSI is, let's say, 30%, 14-15% on technology, so on and so forth. But, the problem is consumption. anything to consumption, the government has to do something to lift the demand side of things. Demand side of things so that autos start to do well. Housing finance starts to do well. Where are we seeing? The cement demand is so sluggish. You know, home improvements are not
I
happening.
think barring BFSI, no other sector is impressed on the upside.
Yeah, technology a bit
I
here
mean,
and there.
it's a mixed bag, right?
Is there a difference between the buy side and the sell side?
Yeah, clearly, right? Nirav, you know, I think there's a consensus in the country, forget the studio, that from a 5-year time horizon, India is a great story.
Yeah.
You extend the time horizon, it looks even more constructive. But let's get down to what it is for the next 1 year. From 5 years, it's a buy the dip. From 1 year, is this sell the rally, consolidate, rebalance, or largely because better opportunities will happen between this somewhat and next somewhat?
So, you know, first of all, consumption. So what you are looking at consumption, I completely agree. So there are pockets of slowdown. Now look at it this way. You're looking from the lens of what you see in reported listed entities, right? Now let me turn and twist and say that, look at Blinkit. What is the GMV? 25,000 crores, right? And you got Instamart, that is another 20,000 crores. 45,000 crores of revenues has been generated in top 20 cities in the last 3 years, right? So someone is losing out, right? Whether it's DMart or whether it's going to be Hindustan Lever, because then...
All the Kirana stores also.
All the Kirana
So
stores.
it's coming at the cost of someone.
So I think in India, I've said this again, we don't have too much of statistical data, but I'm saying from my perspective, you know, if I look at the PMI figures, right, which is, let's say, which are non-government figures, we are talking about HSBC PMI figures, 57, 58, right?
57.7 is what we're
right.
working
So we are rocking, right? If I look at very, very aggregate numbers.
This is almost a bull and bear from MK, right?
Which is great, buy side, sell side difference. And that's cool.
That's exactly what we wanted.
Right, so GST numbers are rising at about in line with, you know, your nominal figures after having a buoyancy of more than 1 over the last 3 years, which is also very fine. Autos, we are seeing a slowdown, but that has to be the case. You are selling 4.5 million cars. US does about 12
So,
million
very
cars.
pointed question. Did you buy this dip that happened last week? Yes or no?
I am fully committed today. So there
You're
is a
full-
question.
you're
Fully,
fully
100%,
invested?
100% of my net worth.